everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. Today, my guest is Chris Faulkner, the CEO of Breitling Oil and Gas. Chris, thanks very much for coming on the show.
You bet. Thank you.
Well, nothing less than a revolution occurring right now in the oil and gas industry with new technologies, fracking, and so forth. You are directly involved in that. Can you give us a little bit of a overview of what's happening there, this revolution?
You bet. Well, Breitling Oil and Gas is an independent exploration and production company, and we target the United States and the various basins throughout the United States in what now are known as unconventional resources. And they're unconventional by their geology, by their characteristics that once had thought they were never producible. These were the source beds for the conventional reservoirs that have powered this country for the last century. And we thought these things are way too tight. They're never going to be able to be unlocked.
So they knew about them.
Always knew about them.
They were there. It was just the idea that we couldn't get to them, but now we can.
Now we can. And they have, so everyone understands what we're talking about. When you say tight, they have the same porosity and permeability as concrete. So go out and pour liquid on concrete. It's not going to go through it. It's going to lay on top of it, right? Or it's going to run off. But with the onset of two technologies, one, drilling sideways through the rock to expose the wellbore to a huge amount of pay zone, because when you drill sideways now, we're going 2 miles sideways into these zones. So 10,000 feet, we're exposing the wellbore to the pay zone, but that pay zone is still too tight to produce. So with fracking, or hydraulic fracturing stimulation, which is injecting a lot of water, a lot of sand, and a little bit of chemical to act as a lubricant into that formation, and when it hits it, it cracks it open like an egg. If
it opens it up,
cracks it open, little fissures in there. So like a hard-boiled egg, drop it off your counter. It doesn't explode; it cracks open. All those little fissures now allow for the trapped hydrocarbon, the oil and the gas, to flow into the wellbore and to the surface. That has allowed us now to reach a tremendous amount of new oil and gas in this country, and we're on the road to energy independence for the first time since 1953.
Wow, very exciting. Now, the regions are, we know about North Dakota, the Bakken Field, they're in Texas. Where else in the United States?
We've got the Permian Basin there in Texas, the Eagle Ford Shale down in South Texas, the Utica and the Marcellus in Pennsylvania and Ohio, and now a new play emerging in Kansas and Oklahoma called the Horizontal Mississippi play. And the Mississippi's been a formation we drilled back in the 50s, but vertically. Again, going back and taking that dynamic duo, fracking and horizontal drilling, and unlocking some tremendous reserves in that area. But to give you an idea, the estimates from the Bakken alone, just one area in North Dakota and a little bit of area in Montana, and now we found some in Canada, 24 billion barrels of new oil.
That's enormous. Now, how about the major players? When you talk about the Exxon Mobils, the Chevrons, are they involved in this?
It's interesting about, a lot of folks think that big oil are the ones that pioneer these new basins and these new discoveries. They really don't. Who drives this are independents like us and other companies out there. The small guy, who's a risk taker. He's a wildcatter. He's going to go try different things that an Exxon isn't going to waste their time with, because it may not work and they don't have time to set out there and try new things, because they're working for a stock price and they have shareholders that want to see returns and that stock going up. But an independent will go out there, take a risk, and then if it does work, what happens? He proves up the play, then Exxon will come in, write him a check, and take his company, because now they know that it works. And there's a great example of that with Brigham, a great company in the Bakken Shale, was just bought by Total, a French company, for about $4.5 billion, because Brigham had some great results in the Bakken with some great acreage. And now Total says, thank you, we'll take that and all the expertise, and we'll use it.
Now, we've seen the effect on price, at least in terms of natural gas, as a result of the fracking and the new technologies and the new drilling. We have a huge, enormous surplus of natural gas. Price has come down to levels that many of the so-called experts in the industry said we would never see again. Does it portend the same thing for crude oil? Are we going to see this enormous new increase in supply that'll bring the price down?
There's two sides of that debate, right? One side says, look, we've shifted from natural gas to liquids plays, and now everyone's drilling liquids, so the supply is going to overrun the market. The problem that I have with that is simply, we have increased our daily production in the United States to about 6 million barrels of oil with all of our efforts in the last decade. Now, we're still burning through 19 million barrels of oil, and that delta is supplied by the Middle East, by Canada, and by Mexico.
Right.
So we have a long way to go to where we can start saying, okay, Mike, we have so much oil now it's running out of our ears, because we have a kind of unquenchable thirst for crude oil in this country. The one difference of that and natural gas is our natural gas demand has been flat. We're not using it for transportation or power generation, and so we've had no demand demand drivers in the market and a huge amount of supply. In 2005, we had forecasted as an industry we were going to be 80 BCF or 80 billion cubic feet short of natural gas. Today, that number is 0, and we have an excess of it. So we've done an about face. And that's why the commodity price now is so cheap, we can't even bring it out of the ground and make money selling it.
So, but yet there are companies still bringing it out of the ground and at least trying to sell it. How long can they stay in business with a price well below their break-even price?
Well, it's different for each company because a lot of these companies have already paid for their acreage and they're just now trying to drill out additional production. But if you have a company out there trying to hold acreage, they have to drill these wells in order to kick in the HBP or held by production clause in these leases. If not, they lose the leases and they paid a great deal of money. Just so you know, back in the heyday in Louisiana, we were paying $15,000 for a single acre just to drill a well. We needed 1,280 acres to drill one well, so it's a huge amount of money just before you start doing anything in the ground. So you're trying to hold that acreage, but at the end of the day, most of the basins right now, folks will tell you the break-even points fully loaded are $3.50 or $4 or even higher. So those companies have got to shift a part of their capex, in my mind, or the majority, toward liquids, natural gas liquids or crude, because they can't continue drilling dry gas and losing money. Even today, it's at $3.20, so still probably below the break-even point of most areas.
Yeah. Now, what about outside the United States? Fracking, horizontal drilling. Are there other parts of the world where we see this happening now?
It's emerging in a lot of areas. And you look at some of the northern African countries in Algeria and Tunisia, these places have a lot of shale gas deposits. We're also seeing it in South Africa, in the Karoo Basin, a ton of deposits there. Poland is out in front of, I think, what I call the international shale gas race. Poland has already drilled some shale gas. They have a government who's very keen on fracking. They have a big need to get away from their marriage to Gazprom and the piped gas from Russia. They've been held hostage over the past decades with the pricing model from Gazprom. So they want to have an independent domestic solution for Europe. And Poland is leading that game. And you could also bet the second person leading the game here is China. They're out ahead with possibly reserve estimates now coming in double that of the entire United States. Now, they have a big demand, obviously, a 7% GDP from their soft landing. They need all the oil and gas they can get, and they're one of the biggest importers right now, right behind us, of hydrocarbon products. Now, if they can get in the driver's seat, they certainly want to have a domestic supply for all of those folks over there in China who need oil and gas.
Sure. And what about the public resistance, at least here in the United States, to this? People talking about contaminated water supply. There's political resistance now mounting in Washington, EPA, new regulations, etc. How much of a concern is this to the industry, to the expansion of this activity?
I think it's a big concern in my mind because I think we got to the party late. I think that we let other folks do the speaking for us in the documentary movies and all of the theatrics that have gotten the public scared. And as an industry, we use terms like top secret, trade secret, proprietary way too much because folks need to trust us. If we're going to go out on their land and drill for oil and gas and power this country's future energy needs, then we need to do it in a safe manner, but we also have to have the public behind us. And I think right now we've got issues with the public concerns over fracking. The EPA, like you mentioned, has signaled they're going to put additional regulation on the industry on top of the state authorities who already govern us. But if you ask the average person out on the street, they'll tell you they think the oil and gas industry is unregulated today, when in fact it's one of the highest regulated industries out there, but the average person doesn't know that. So as an industry, we need to do a better job educating people, getting out and having town hall meetings, sitting down with folks and saying, this is what we're doing, this is why it's safe, and this is why you shouldn't have a concern. A lot of folks don't know the first well was fracked in 1941 in Kansas,
not
yesterday.
Long time ago,
right? But over 1.2 million wells have been fracked in this country. But if you ask again the average citizen, this is something you guys cooked up or invented 5 years ago.
Well, one thing the public does like is low energy prices, and this is contributing to that at least somewhat with electricity generation, natural gas, etc.
You're right.
How does an investor play this? I mean, should we buy natural gas at this price? Is this an attractive price, or is it just going to stay down in this level for a long time?
I think natural gas is a pretty risky play right now because we don't have a domestic energy policy that dictates any kind of demand usage increasers for natural gas. I'd love to see natural gas for power generation. I'd love to see natural gas for transportation, buses, trains, commuter, big to haul trucks. even in passenger vehicles. But the reality is that the current administration is very keen on wind and solar, and again, not on natural gas or oil. So do I think we're going to see depressed prices for a bit of the near term? Yes. Do I think we're going to see $3 nat gas forever? No. But I think on the near term, if you want to make an investment, it's going to be a risky one in natural gas. But I do think crude is not going to hit $65, and I think it's near where you're going to see it from here on out. But I don't think it's going to double overnight unless we see something in Iran or the Middle East happen, because again, speculation in these commodities really drive them up literally overnight.
Sure, absolutely. Well, it's definitely a fascinating development. We're definitely going to be following it. Chris, I want to thank you very much for being on the show.
Thank you.
Okay. That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.